Hi there, it's Bill with Smart Trades. It's Tuesday, October 4th, around 1:40 p.m. Pacific Time. And as always, if you'd like more frequent and timely updates, please visit me at smarttrades.com. Again, that's smarttrades.com. I do live updates during the day via Twitter, as well as reports as needed via email. And in fact, I did a report earlier today, and these charts are from that report. And at that time, I had noted that we had some bullish divergences and were testing the bottom of a channel in the S&P. Additionally, we were testing longer-term support, and that the pattern off of the highs from late August, early September, even though we've been going down obviously in a persistent fashion, the pattern is more likely a corrective one than an impulsive one to the downside. Now, that said, here's an alternate bearish count, and it allows for a possible acceleration to the downside. I don't think that you can dismiss this count. I don't favor this count, but that said, if we have a corrective rally from here that fails to take out the 1200 area, basis the S&P, in particular, if we get a weak corrective rally that rolls over, say, around 1150 or so, or perhaps even a little lower than that, and we take out today's lows around 1075, look out below. A long-term target for the S&P is at least S&P 1000. We're probably going to go lower than that eventually. That said, again, the pattern off of the highs best counts as corrective. Here's the spiders. You'll notice the low back in August is right around the 110.30 area. At the time of this report, we were indeed trying to test that area. We had a high of 110.34, and we were faltering and wavering around that high. However, again, you can see the channel here. We were still in that corrective channel. And again, here's the Dow, same count, ABCX, ABC, best counting as a corrective decline, even though we have taken out the August low on the cash. Note here that we've got swing lows, and earlier today, again, we were testing that area. My theory at the time, earlier today, was that if we could close above those recent swing lows, that would be at least short-term bullish. And again, we were testing the channel, and so far we were holding it, and indeed we have held it so far. Now, slightly different story on the futures. We have a bit of a double bottom on the futures. We actually have held there. You can see the bullish candlesticks both at the August low and also on at the point of this report at today's low. We've actually gone up from there quite a bit. That said, we have a possible double bottom with a corrective looking pattern again to the downside off of the September peak. Here's an Elliott wave count with that. We can count this as a possible A down. Again, this is the Dow futures. Here's our double bottom. We have an A up, possible B down. Perhaps we're into a flat. We would target the area probably around 11,800 or so basis the Dow. Let's go back to the S&P. The S&P, you're looking at about 1230 to 1250, maybe 1260 on the cash. We shall see. It's a little early to tell, but a flat should bring us up in a C wave up above the top of the A wave peak. So A, B, and then C up into this zone here. Again, maybe 11,700 on the Dow. We'll have to refine that as we go. This is, again, the futures, and noting the double bottom. NASDAQ has made a higher low. That tends to be bullish. The NASDAQ tends to lead. Now here's an alternate count, very ugly count from an Elliott wave perspective. Nonetheless, worth noting here. This counts as 1, 2, 3, 4, and a fifth wave down to a new low, and the basis the spiders, possible kind of wedge type fifth wave. All kinds of problems with this count in terms of the shorter term pattern. You don't have a clear 5 waves down in 3. You don't have a clear 5 waves down in 1. You don't have a clear 5 waves down in 5. That said, this count is possible. There's you could really try to force feed this count. The bottom line is, even if this count is correct. The short-term implications are about the same. Again, a rally back to perhaps 1250 on the S&P. That's what, 125, 126, 127 on the spiders. And basically, even though it's a very different count in terms of the long-term implications than what I've showed in the on the previous slides here, in terms of the short-term picture, it still allows for rallies back above the previous peak, and that should suck in a lot of bulls. Bank of America, very interesting. I think that Bank of America is probably key to the economic future of our country at this point. I think a default by Bank of America would have widespread bearish implications. Obviously, with the federal government's between a rock and a hard place in terms of bailouts at this point in time, with the political situation, the economic and debt crises, and so on and so forth. But at any rate, earlier today I had noted that it looked like, although Bank of America long-term looks like it's in trouble, short-term we were losing momentum. We had a nice little candlestick here off of the lows, not yet a completed pattern at the time of this report. Nonetheless, we wound up closing up about 4%. So from low to high, about an 8% swing in Bank of America today. Again, off of that possibly somewhat bullish pattern that we had earlier today. Bonds. This is a TLT, the 20-year Treasury bond fund, and I was looking for a possible peak. I had noted to my clients that I was looking at 121 as a possible peak. We went right through there. And longer term, we do have major resistance, a nice little Elliott wave Fibonacci pattern, an ABC up to 1.62. That's at the previous 2008 peak, up around the 125 area. And indeed, so far today, we have failed to punch through there. It does look like a significant area, both in terms of the shorter term pattern or intermediate term pattern from the 2010 low, and also relative to the 2008 peak. Gold. I was looking at gold as a possible triangle. Well, it's a pretty ugly triangle. Nonetheless, the pattern off of the lows is corrective, and we broke down today back into a counter trend pattern for gold relative to stocks. I think that I favor at least a retest of the recent lows, the late September lows in gold, and then perhaps a bounce. We'll see what happens after that. But short term, I'm looking at somewhat lower prices possibly for gold. Crude oil, very much tracking the stock market, had a very similar pattern in terms of testing previous support as resistance from below. It did wind up closing up above 78, breaking through that short-term resistance intraday, just as the stock market did. And copper, JJC here, this is a copper fund. It tracks the futures. And copper had a very nice corrective looking pattern off of its highs. It's obviously shattered that pattern, dropping very sharply. It's retraced about 50% from the 2008-2009 bottom, and that it is finding some support there. Also, there's support down around 36, 37 for the JJC symbol. But this is a cause for concern in terms of the longer-term picture, in my opinion. Copper did have a corrective pattern. That pattern is broken. If we cannot hold here and start rallying in an impulsive fashion, I think that's a bad sign longer term for the world economy and probably for the stock market as well. Dow Jones Shanghai, that pattern remains corrective looking, at least in my opinion, off of the 2009 peak. I think that this best counts as a series of ABCs. We've got support down around the 280, 285 area for the Dow Jones Shanghai index, very much tracking similar to the Shanghai index in terms of the price pattern. So as long as we can hold this basic wedge shape, and hold that support around the 280, 285 area, I think that it probably is an indication that the Chinese market's going to hold up. And I think if the Chinese market holds up, I think the world market, to a greater or lesser extent, will follow. That's about it for now. Again, looking for somewhat of a bounce in the stock market. Stock market definitely not out of the woods yet in terms of the longer term picture. I'm looking for much lower prices, intermediate to longer term, and if we fail to follow through, say around the 1200 area on the S&P, things could get bad sooner rather than later. Nonetheless, I'm not as bearish as the super bears, and as always, please visit me at smarttrades.com if you want more frequent updates. Get these updates intraday before the market makes its move at smarttrades.com. Thanks so much for watching. Have a great week. Thanks again. Bye-bye.